All right, we'll start recording right here. Thanks everyone for attending this week's meeting. Appreciate the participation. It's 23 March 2022, and this is the Group A P Capital Trading meeting. And let's get right into it. The dashboard. I just have a dashboard slide. I don't have a dashboard browser page set up. Give me 1 second here. So if I understand what happened yesterday, I think there was a time discrepancy, a time misunderstanding um, with with Mike and the presenter yesterday. So I think that's going to be rescheduled. Is that what happened? Because I was actually out and about when that happened.
I'm not sure why the reason why, but it's definitely scheduled for till next week.
Okay, reschedule. Okay, yeah. I think the presenter thought it was 2 hours different from what Mike thought it was. So apologies for that. But next week looks standard. So it'd be me presenting on Monday night at 7 p.m. and then Mike will be doing his trade book at 6 p.m. Eastern time. So yeah, pretty standard week next week. Roadmap wise, I mean, we're moving right along and we're getting close to the end here. You know, it's not too far out. So we're definitely in the refined stage of our general roadmap. Again, this is different for everybody, but you might want to think of yourself being in the refined process. Take the lessons you've learned at this point and start to refine your strategies. Think about your trade management, getting more out of your trades. Perhaps we're going to talk about taking profit today, so that's definitely something you want to be thinking about. And continually improving stats and improving your trade book. And for those of you who have kept at the trade book process and turning in iterative variations to Susan, keep on doing that because I think it's a great process and you'll get good feedback. Actually, before I get into the next slide, is Cesar here today? I think.
Yeah, can you hear me?
I can. Yeah. Hey, I thought that was you. Yes.
Yeah.
So I asked Cesar if he could present today before we talk about taking profits because he has a pretty cool trading methodology, a cool system, and it's kind of unique, and he's achieved really good results out of it. Like he's produced results over the past month or more that are impressive. Definitely completely beyond the coin flip type of trading that sometimes we feel like we're doing. Definitely something that's working for him. So I asked him to come here today to tell us what he's done and how he got there. So I'm going to turn it right over to you, Cesar.
Yeah. So how do I present with the hand?
Yeah, I might have to make you a presenter. Let me check real quick.
Okay.
All right. Yeah, you are co-host now. So if you actually to the right of the hand, there should be now an arrow pointing up that says
Okay.
to present.
Let's see. Okay. Let's do that one. I don't know what that is. Let's see. Okay.
There we go.
I'm trying to see what I'm presenting. Oh, that's Apple. Okay. Okay, so can everybody see my screen now?
Yeah.
Okay, so what right at the back you see is a little bit different. So I want to explain the windows real quick so that you know what you're looking at. So this, I don't know if you're familiar with the Camarilla pivots. So this is the Camarilla pivots from DAS without pre-market data. These are the cams with the pre-market data. Okay, and this is just a 5-minute chart. And this on this corner is volume by price. What I just have is set up for just a day. the day that we're trading. So I just like to see where the value is, which is the blue line, and value areas. And time and sales, and this is the level 2. This right here is what I use the most, and this is not DAS, this is Thinkorswim. And what is different is that this is the volume by price, but I have it set up every 30 minutes. So
Sorry, Cesar, are you pointing to the screen that you're sharing? Is that...
I think, I'm sorry. Can you see it now?
Yeah, definitely. Thank you.
I'm sorry, because I'm looking at one of my monitors and I'm not. All right, so let me go again. So, okay, so this is the Camarilla pivots without pre-market data. Okay. And this is the CAMs with pre-market data. The reason I like that because sometimes they're different. In this case, in Apple, they're not, but sometimes you have like compression here, and here you have higher value area. So that gives me an idea pretty much where the stock might go. This is volume by price just for the day, and this is just a plain 5-minute chart. I use the 5-minute chart on all my screens. I don't use the 1 minute or 3 minutes. I only use the 5-minute because it allows me to use don't jump into that many trades. So I use the 5-minute. And this that I was pointing at, it's the same volume by price study from that, but Thinkorswim allows me to customize it to every half hour. So that's half hour, that's half hour, that's half hour, and so on. Okay. So this is what I want. This is like the bulk of my strategy is looking at this and finding out if the point of control, which is this orange line, is moving higher or lower. So the point of control is where the most volume has happened during that period of time. Okay, so whatever the most amount of volume of shares has been exchanged. And for every half hour, I see that, for example, in Apple, I can tell that after 10:30, we started accumulating shares higher, but then we went to a compression. So after the compression, they say, well, we're starting to accumulate shares lower. So if we lose the VWAP, my strategy is if I lose the VWAP, I'm most likely going to go down because I have all this space to cover, right? But since we started accumulating higher, I could just take a trade to the long side. So then all I have to do is just look for an opportunity to get in. And that's just like that's what I didn't trade Apple today. I had it on my watch list, but I didn't trade it because the SPY was actually going the other direction. It was like pretty much consolidating, so I didn't trade it. I didn't feel comfortable trading it. But that's pretty much what I like to do. I like to look at the point of control for every half hour and see if the buyers and sellers are accumulating shares higher or lower. And that gives me an idea where the direction of the stock is going to go. I was going to mention something else.
And what is it you are using? Is it this thing of swing charts, this blue and orange?
The orange is the point of control. This is a line. This orange is the point of control for that period of time. The other thing that I forgot to mention, is that I don't trade for the first half hour. I don't take any opening range breakouts or breakdowns. I just wait for this 9:30 to 10 to finish. This is what I like to call the initial auction during the day. And after that, then I start looking for opportunities.
I'm sorry, excuse me, you do not trade the first hour to you, right?
Yeah, I do not trade the first half hour. Yeah.
Half hour.
Okay. And what is the software, blue and orange? Is it Thinkorswim?
Could you repeat it again? Sorry.
What kind of software you
Oh,
use?
this is Thinkorswim.
Okay,
This is
thank you.
TD Ameritrade. Yeah, it's. I mean, anybody can get Thinkorswim, I believe.
Cesar, can you
Or
pull
big.
that? Is there any way to pull that Thinkorswim window a little bit bigger up
Yeah,
into?
sure.
Just
I'll make it bigger.
yeah, just to see.
There you go.
Okay, yeah. Just so we can get an idea of what it looks
Yeah.
like.
So this is the same concept that to some degree that Toro uses for value. You know, we store when the stock is moving from value to value. So this is the value for that half hour, okay? And then the value move higher. So that means that in theory, right, because this is a stock market, so that shares are being accumulated, exchanged, and now value for Apple today went up from 10 to 10, 25, and 30. And then this went into a consolidation period. Okay, and then it started going higher. The good thing that I like about this is that I can see when there's this. You see how this blue line is telling me that we're finding some sort of support. So chances are that we're gonna get another push because we're finding support between 11:30 to 12:55, 5ish. So, and when I look at it was pretty much here that we had one more push pretty much. That was that. So, but anyway, this is what it is like I said, I use a 5 minute because it's a slower pace, and after 10 o'clock I start looking for opportunities.
So how do you take an entry, Cesar? So like, I love that you wait a whole half hour to trade.
Yeah.
That's very unique.
Yeah.
And
So
I
for
think it's
me,
really cool.
so for me to take an entry, I like to see, like I'm just only trading one strategy. With this, we could do a bunch of strategy, but I use 31. And what I like to look for is that the blue lines, which is the value area, along with the point of control, they are moving higher. So if they're moving higher, then I start to look for a long position. If I'm like transitioning from camps to camps. That's what I like to see. If we are in between Camarilla, like if we are transitioning, this was that time that I said that we were like in support. You can see it here. So I would like to get into a position from camp to camp. I would not like to go long if I have like a Camarilla pivot acting at resistance. So and I like to see, for example, this is a 5 minute, so I like to see a new 5 minute high, but it has to be confirmed by the level 2. In other words, if I'm going to go long on that candle right there, I like to see the bid following the ask. So if the ask is printing higher higher price, I like to see the bid following it, not staying behind. So that I learned from Ed, the moderator. So that's what I look for entries, and I use the tool, like I said, to let me just go here to determine if I want to go long or short. For example, here you can see that we had 1, 2, 3 30-minute time periods where there was resistance. We could not. You see that the line just stayed uh, straight. It wasn't going up or down. So when I start to see that, I say, okay, so there's a good chance that we have some sort of resistance. So what I'm looking for is for this to break. And yeah, here we broke lower for the lower value area, and the point of control, which is my orange line, was lower than this one. So what happened here was, this is what it was called a accumulation, I think. So they were accumulating areas on the supply just to go down to push the price lower. So these are the things that I like to look. Higher value areas with higher point of controls, and if I see value areas that are just one straight line, that gives me an indication that we have some potential resistance or potential support. So, and for the entry, like I said, what I like to look for my entry is confirmation of the value. For example, if I'm going to take this R4 breakout, I want to see that it closes above it, and then I make a new high, but it needs to be confirmed by the level 2. In other words, the ask needs to be going higher and the bid needs to be following it. And then I also look at the, then I look at the level 2, see if I have sellers higher or buyers lower. All that process goes into play. But for my initial entry, that's what I'm looking for. Like when Mike says what jumps out of the screen when I'm looking at stocks is this. When I see that to me is, okay, we're going to push higher. So all I have to do is find an entry. Let me show you the SPY today, because the SPY was really interesting today. The SPY, let me just make it a little smaller. So when I was looking at the SPY today, it's the same thing was happening. I was seeing some sort of resistance, and then we had a 5-minute candle that went through the resistance, but like a fade breakout, and then it actually swallowed all of these orders. You can see by the size of the value area, it just swallowed it. And from there, let me just bring that screen. Where's the SPY? Let me show you so you can see what I'm talking about. Do you see the SPY screen?
Mm-hmm.
So that's that candle right there. So we have resistance noted by this. So right, I'm thinking short because we can't break, and all of a sudden, boom, we break through it, and that's what we get. We have that beautiful reverse hammer, and then we just boom go down. Now what I do, I just wait. I don't take it here because this is just too big of a move. What I would like to do is just wait. Like I said, I just waited here when it broke. I had a nice trend. It broke the 200. I just waited, new low, boom. It was a little late in the day, but eventually, I made some profit on it. It wasn't much, but it was something. So that's what I like to look for entries.
Nice. How about stops, Cesar? Are they tend to be wide or?
Yes, for stops, since this is, like I said, I use a 5-minute, right? So for 5 minutes, my stops by default are not too tight, as if I were to use the 1-minute chart. So the stops are typically wide because I like to give the trade room to move, especially in this market. This market hasn't been that easy to trade. It has been like the first half hour we tend to go high, and then eventually we sell for the rest of the day. So I leave my stop loss wide, and then I cover when I hit my target. So I'm sorry for that. So if I were to enter, for example, Apple, when it broke here, I would probably put my stop right there and then just run it all the way down to the target would have been like R3 pretty much. So So yeah, I do use wide stop losses. I try to experiment with tighter stop losses, and my equity curve goes the other way. So I just don't
I know the feeling.
decide. I can't feel it. So I just go like that, and it seems to work, you know. So it seems to work for me. So I'm sticking to that, and as I keep practicing and get better, then I can just probably, you know, uh, uh, keep tightening my stop losses. So
Yeah.
with this, I have over 100 trades that I collected data. So, and it's been pretty good so far. And at this point into the bootcamp, I mean, I'm just sticking with it.
Yeah.
So
If it ain't broke, don't fix it. Yeah, for sure.
yeah. So that's my strategy. I like to see everything in one screen, and I use the 5 minutes. So
No, I love your strategy. I love the patience of it. It's very cool because a lot of us are so tempted to make our money in the first minute, 5 minutes, 10 minutes, 15 minutes, whatever, and you wait a full half hour before you let things settle out. And I think that's really impressive. Because there's so much money to be made later in the morning. You know, just let things shake out, let the market show you direction and
Yeah.
purpose. Yeah.
yeah. Oh, the other thing I forgot to mention, I only traded Apple, SPY, and QQQs. I just don't trade anything else.
Excuse me. Yeah, that's right. That's another thing. Yeah.
Yeah. So that's my watch list every single day.
Yeah.
pretty much.
That's another thing that I like about Cesar. I forgot about that. Yeah, you trade Apple, the Qs, and SPY. Is that what you said?
Yeah,
Yeah.
QQQ and SPY. Yeah.
Yeah.
So
And there's a lot of people that do that. They just trade like a very small, if not one security or up to three like Cesar. But yeah, you can totally do that. You know, you don't always have to have, like, I have a watch list of about 25 stocks that I'm looking, and other people, their watch list is the whole market. You know, they'll have scanners that let them look at anything. You know, so they potentially looking at thousands of stocks. But I love traders that really focus on a few tickers. That's really cool.
yeah, I believe it helps me to, because what I try to do is try to find what the market's telling me that day. You know, sometimes the market wants to go higher on news, but eventually it goes lower. So, and my other rule is that I learned the hard way is not to trade when the Fed is about to make an announcement.
That's very true. Yeah.
I it hurts. Yeah.
Yeah.
At least I wait for the announcement to be over, and then I decide what direction the market's gonna go.
Sure. Yeah.
So-
but yeah, I agree. It's just like earnings. You don't want to be in at the announcement, but there are people that developed a feel for trading right after the Fed speaks or releases their minutes or right after earnings are announced, and that's legitimate if you can kind of work it out. Yeah, for sure.
Yeah.
Well, thanks.
So-
Anyone have any
Yeah, no
questions for Cesar out there? Checking the chat window.
Okay. Yeah.
I have a question on that bar 5-minute chart that only has the volume profile. It has highlighted blue, yellow.
This one? The Thinkorswim one?
No, sorry, on the left, the very small 5-minute.
Oh, this. Yeah.
Yes.
Yeah.
So, look, I thought you can only highlight all of them or nothing. So you're highlighting different things. What do they signify? The support and resistance?
Well, this is just the on that the volume by price study,
Yes.
but it's just for one day. Like when I click to data, you see I only have one day. So when the day starts, that window is empty. There's nothing in it, and throughout the day it starts to develop. But to answer your question, this is value area high, value area low, and that's the point of control.
Yeah.
Let me see how I set it up. So the way I set it up, I have 3 volume by prices. And then you see this is value area, point of control. And I also play with the percentages. So this is another value area, but this is taking 95% of the shares. The first one was taking just 68%, and the last one, I believe it was 99%, 99%. Yeah. So that's why when I see like 99%, I mean, it's an indication that, okay, we're at the bottom, so, or at the top. So something might happen.
Very
So,
cool. Very
so
cool.
that's how I set it up. But again, this is just and I deleted all the candles, as you can see. So no candles. That way I just see the bars, because I believe when I put it here, it confuses me too much. So I just put it on the side as a new window.
Very cool.
Okay.
Thank you.
Cesar, in the chat window, Dwayne had a question. He asked,
Sure.
"Is that a default study that comes with Thinkorswim, and what is the name of it?"
Yeah, the default study is, I'll show you right now, volume by price. And the settings, like I said, every time is 30 minutes. So I do a minute. And every 30 minutes I get a new profile. And same to what I was showing Dimas, I have it as 95% instead of 70, which is the default that the study comes with. So I have it at 95. You can take a screenshot if you want. So show the point of control. This is what I like to see, the point of control. And show the value area, I said no, because I just want to see the lines. Otherwise it gets too confusing for me, but you can play with that.
He had a follow-up question. He's asking, does it show the current price during market hours?
It will show it. I have to play with that, but yeah, I think Thinkorswim shows it with the bubbles on the side. But for that, I use DAS, because for DAS I have that right here. That's the current price. So, but yeah, to answer your question, yeah, it should show the price. Yeah.
I got a question. As long as we have a Thinkorswim
Yeah.
/ DOS user, how well does the current price on DOS and Thinkorswim match up with each other?
There's a little bit of lag on Thinkorswim, but it's not that. For my strategy, it's not bad, because I have a slow strategy.
Yeah.
So I find out that when I'm using the platform that you guys provided for the bootcamp, I see a little bit of difference between the fields and what it should have been. But again, for my strategy, it doesn't. It's irrelevant. So.
Gotcha. Yeah. Just curious.
Yeah.
Very cool.
So that's another way of looking at the market. I mean, there's so many ways of doing this that it's just, whatever works for people,
Yeah, no, I love it. I love the results you're getting, Cesar, and it goes without saying that his results come with strict risk management discipline, right? I mean, when you're stopped out, you stop out, right?
I do, yeah.
Yeah.
So, and I like to wait. Another thing, I like to wait for the candle to close. Like if on the SPY, if I would have taken this trade right here during the 5 minutes, because remember this is a 5-minute candle. So during minute 3 or 4 of the 5-minute candle, I mean this is super bullish. So I like to wait for it to close, because sometimes that can happen. So I rather lose a little bit of profit, but make sure that I'm actually on the right direction,
Right.
than to just enter the trade halfway through a candle. At least on the 5 minutes, on the 1 minute is different. So.
Yep. Yeah, totally.
So yeah, that's it. If anybody has questions, yeah, I'm actually on I was gonna say Discord, on the chat, so you can ask questions if you want.
Yeah, cool. Any last questions for Cesar? Had a few come through the chat, but none out loud. All right, awesome. Thank you so much, Cesar.
Yeah,
I know you're
my pleasure.
I know you're busy in the evening, so thank you for coming to talk about this. This is very cool, very unique strategy, and yeah, I love it. I love people who combine also Thinkorswim and DAS. I think there's usefulness in both platforms, and it shows a lot of ingenuity to use both to your favor.
Yeah, thank you. Appreciate it. And thank you for the opportunity to present.
All right, brother.
Yeah. All right, I'm gonna just close stop presenting.
Yeah.
Okay.
Trying to get back to where we were here.
You're welcome.
Resume. Uh-oh, I got an infinity screen going on. That ain't good. Hold up. How are we looking now? Okay, that looks better. Yeah, so this week is about, the theme is kind of taking profits. And, man, I swear we could have a whole boot camp about taking profits. You know, if we had a bunch of experienced traders, we could probably spend 90 days together just discussing how to take profit. It's a really complicated issue. And I always say it's the hardest thing in trading. Like, when to enter a trade is hard enough, but when to take your money is it's 3 to 5 times harder. It's a tough thing to figure out. And if you're struggling with it and you don't feel like you get enough out of your trades, like, you're not alone. And look, I feel like that every single day. Andrew feels like that every single day. In fact, you know, I see Andrew take profits way lower than I think he should sometimes. I watch him, I'm like, you've got a good thing going here, and, you know, he's partially out now he's reducing his position. You know, sometimes I think, you got more, you know, you can make so much more. But you take it off where you take it off. You know, you take it off according to your needs and what tells you you had a good day. So, like, you know, it's a very personal matter. That's a big part of it. It's about what you're trying to get out of trading. So it's very hard to, in fact, in trading, it's the hardest thing to take from your own mind and put it on someone else's plate. You know what I mean? Like, to say, like, I would have held for more or whatever. It's a very personal endeavor. So in light of that, like, let's take a look here. I just want to tell a quick story here. When I first started trading, this is actually not when I first started trading. This was about 9 months after I had first started trading high day breaks. 8 months after I started trading high day breaks, and maybe about a year after I started full-time day trading. And I was very happy to get, at this point in my trading, I decided I like pricey stocks because I could read them a bit better. So, like, you can look back here on Facebook, back in the day, it used to be about 254. And I was very happy to get 50-cent moves out of a stock. And when I came to Bearable Traders, I noticed everybody partial. There's an idea I never thought of before, but people partialed out of their positions. When I was day trading back before I knew what the hell I was doing, I was back at work, like day trading while I was working, which is a bad idea. I was getting into positions and getting out of positions, and the idea of even partially never occurred to me. So then I joined Bearable Traders, and, like, I saw people partial, and I was like, oh, that's interesting, and oh, we can make hotkeys to partial. Like, oh, this is very innovative and kind of smart. You know, how to get out of a position more wisely. And so for a long time, I was big into partialing, and I didn't know how much I could get out of a trade. So you can see here on this Facebook trade, I took off about every 50 cents on this trade. And this is a great trade, right? It's going up higher and higher, and I'm getting out at really good partials, as a matter of fact, like top of a candle here, top of a candle here, top here, like good partials, like well thought out. But I figured out over time, I was getting out way too early for a stock like Facebook. It's a $254 stock at the time, and I'm taking 50-cent moves on it. Like, I figured out later I could get more out of it. So, oops, this is a animated slide. Sorry about that. You know, here's a later trade. This is in 7 April 2021. So that's I don't know how many months that is after August, but in any case, I started to hold for more, and I knew, like, okay, like, these stocks can move a lot. Like, I shouldn't be taking 50-cent moves on stocks that are $100, $200, $300. Like, let them move a bit because they can. So here's a trade where I let it move more like dollar moves. And that was my methodology for a little while. And then now recently it's moved more to like this. Like, I get in and I get out. And it's funny I should say this very day. Every time I want to talk about something, I contradict myself on that very day. But I traded Tesla today, and I did partial because I had no idea how far Tesla could go. Like it looked like Tesla might have a crazy day where it could have run to 1100 today, or it could have gone down to 900. I really didn't know. So I did partial on Tesla today. But I will tell you, very rare. I've partial on a couple trades since in 2022, but 99.7% of my trades have just been in and out. And so this is what I've gravitated toward here is just, and this is yesterday on Facebook, is just getting in, setting a reasonable target, and getting out of the trade. And usually it works out really well. You know, like, so Facebook here got in around 214 and I got out around 216. It's a $2 move on Facebook. That's great. It's a $214 stock. A $2 move is great. We're getting out near a level that means something around R4 and a dollar level of 216. And you can see near my exit how much it wavered, you know. It spent a long time, but it spent 5-6 minutes here deciding whether it was going to go higher or lower. And eventually it went higher, but that's fine. You got to let those kind of go. But what I realized in my trading is that this was my issue, is that if you consider taking a trade with $100 risk, this is the kind of the result. If $100 is your R, this is the result of partialing out. And I was partialing 50% each move because high day breaks are very momentum based moves. So if I took 50-cent moves on Facebook and got in, I would eventually, if the trade was perfect, if it kept going up and up and up, I would get 1 partial, 2, 3, 4, 5, 6, 7 partials, and then actually I'd be out of shares the way I trade, because I usually took 100 shares. I'd be all out on the 8th. After the 7th partial, you know, essentially what would be the 8th partial, that would be all out of the trade. And that would net me, so these aren't exactly 50-cent moves. These are 45-cent moves because I don't usually wait until like I get exactly all the move I think I was going to get. So back in the day when I was partially at 50-cent moves, I was really partially more like 45-cent moves. So that would tap out around, you know, like a $90, $95 profit. If I could hold for dollar moves, which weren't really dollar moves, they're more like 90-cent moves. If a trade went perfectly, I'd make like, you know, $180. And if a trade went ballistic, and sometimes this would happen, like a trade like mRNA back in the COVID days, you know, when COVID was ramping up, you might get $2 moves, which weren't $2 moves, they're more like $1.90 moves. You might top out around, and this is very, very rare, but around $380. So it suddenly occurred to me that like it's silly to try to wait for these. These are galactic, like really good moves, but I would not see these very often. These were very rare where I'd get so many partials and the stock would keep going up. What I got more were like stocks that, you know, like Facebook, that made like a $2 move, and then I'd get out there. So this move here on Facebook is really equivalent to this red line here. So in fact, it's a little bit better, you know, but let's just say it's the same thing. This move from 214 to 216, $2 in Facebook, it's equivalent to taking 50% partials at all these levels. Like imagine a trade where it just keeps going up and you get 50%, 50 off, 50 off, 50 off, 50 off, and the price keeps climbing. I mean, imagine how far it has to climb through dollar moves or through 90-cent moves or whatever it is to get up to this level. Like it suddenly occurred to me that I was trying to accomplish something that I thought was the right thing to do, but it occurred far less than I was giving credit for it happening. So to go back to when I joined Bearable Traders, I was very much, I became enamored, I guess, with taking partials. And I was like, you know, good traders take partials. All the people that I admire take partials. All the people that I'm following that are good traders take partials. And then it just suddenly occurred to me the way I trade that like, this is probably what I should be doing. And I can tell you, you know, based on since I started doing this yields more money for me, and it's just a lot easier. It takes far less time. Some of the trades that like, you know, run for 7 partials and then get out would take hours. Whereas like this trade took, I don't know, 20 minutes, 15 minutes, or whatever it took. And so that matters too, you know, for the time I spend during my day. So my point here is your partialing techniques, how you take your money is going to evolve over time. And don't get sucked into anyone else's like methodology or, you know, it's a very hard thing to figure out. Like I started out saying, you know, I know people that take 10% off on the first move and then let the 90% else ride for the rest of the day. You know, you have all kinds of strategies, but look back at your data, think about, you know, what best suits you, what suits your, I mean, believe it or not, partialing sort of suits personality as well, just like a strategy does, and find what works for you. Anyway, I talked too long, and I wanted to let Tracy talk today. Are you out there, Tracy?
Yep, I'm here.
So, yeah, I've got a few slides from you here.
Yeah, we can put on the vaults one first. That was just sort of an example.
Which one?
That one.
Okay.
Yeah, that one. Yeah. So that's basically, this is part of my trade book, and I kind of needed for myself, I needed sort of a check, because I looked back through my data and I figured out that some of the worst trades that I had were, I wasn't checking one of these columns or all of these columns or yada yada. And so I needed something that I could physically put on my desk that I could print out and say, Tracy, are you checking this? Are you checking this? Are you checking this? And I came up with, well, John, you know, we use acronyms in the military all the time. And so this really, it kind of hit home for me. And it also works for any kind of strategy I believe that I would use in the future, because it's basically a lot of the things that we all use. So I just made the acronym VAULTS, and it's for volume, ATR, L2, time and sales, and the Camarilla pivots. So it basically tells me, look, when I'm looking for a trade, I need to see at least 4 of these line up in my direction. I got to feel good about vaults before I even think of taking the trade. And then when I get in the trade, I use the volume, the L2, and the Camarilla pivots, and the time and sales to stay in that trade. The ATR, I don't really need that so much when I'm inside the trade. And then getting out of the trade, same thing. I'm looking at this stuff to make sure, is it time to get out of the trade? Has the L2 flipped its book? I mean, is it looking, if I'm long, is it looking negative now? So I'm asking myself these 4 questions before, during, and after the trade. And since I've got it literally on my desk, I can't not do it. And it's actually changed. I'm trading 2 different accounts now. I'm trading my live account and the demo account. And I've noticed in my live account, because I'm more careful with my actual money, I've been like 90% green trades because of this one little thing here. So it's really changed quite a bit just by having this little, you know, I don't know what you want to call it, a little smack on the head saying, hey, you're not, you know, you got to follow your rules. And this kind of just is a whole conjunction of all the rules in my trade book about how I take it, management, and get out of it. So, and the other 2, the only thing I with the L2 is I combined Thinkorswim. That was that bookmap slide that I had in there. The bookmap on Thinkorswim is really nice for the L2 because it kind of gives just that visual shot of what the L2, are there orders stacked to the top side if I want to go long? Are there orders stacked to the bottom side if I want to go short? And then if you flip over to that first AMC with the 2-minute, yeah, that one. I came home from work today and I saw this, so I wish I'd have taken the trade actually, but I was too busy taking a screenshot of it. But this is kind of an example of the vaults. You know, I had volume. You can see, like, if you're looking, we're looking at right about 1440. So 240 is right above. It broke if you're doing like an ABCD pattern, it just broke the high of the right after that cam. So I got my Camaria pivot. I've got the volume, and I've got the level 2 stacked on the right side. So, you know, and time and sales was okay. It wasn't the greatest, but it was enough to say, you know what, take that trade. And you could have made about 1 to 2 R depending on where you actually got in on it. And then the book map actually showed trade or orders to the top side as well. So it would have told me I'm pretty confident about this trade. Now, the funny thing is this did reverse in about, I think, another minute or two. It reversed and went way back down. But I'm more of a quick in and out guy. So I like to get my 1 or 2 R's and get out. I'm just not comfortable holding it long term anymore. But if you're a longer term, it still works, you know, because you can say if you're going between cams, you just set your stops a little bit bigger, and you can look at the L2 a little bit further down the road and see, you know, are there orders stacked way higher or way lower to get you there. So, and then I think the last slide on the AMC was just to show you what it actually did. It's there. So it actually did go up a little bit, and you can see this L2 was still stacked. So at that point, you still could have gone, but my volume, you can see the volume was starting to fall off. So at that point, I would have said, you know what, time to cut it short and get out. You know, you would have taken about an R and a half, maybe 2 R, depending on what it was, and you'd have been fine with that. But that was just something I came home, flipped on my computer, and saw it. I didn't even wait for it. So it's just a quick example. But that's how I've been managing my trades in and out. And it's been working.
Nice. So you use Bookmap too?
The book map, yeah, on Thinkorswim, yeah.
Yeah. So.
Yeah, so Bookmap, you can see here, this is the same screenshot of the AMC trade, and you can see it's just a visual shot of the L2. So you can see like the lines, like the orange line is a bigger order number, bigger volume. So what the market maker is going to try and do is fill those orders. Now sometimes they have to come down a bit, you know, to grab the shares, and then they'll go up. But you can see on this one, it's really prejudiced to the upside because there's no orders to the downside really. So you can be pretty positive to get in long right here as long as you keep an eye on it, because when they do what they call a book flip, this is all going to flip back over. And I didn't take a screenshot of it, but in another couple minutes it did flip. And at that point you would have known, okay, trade's over, let's get out. And you would have taken profit pretty well. So
Yeah, that's pretty cool. Yeah, so Bookmap. I'm having a hard time saying that. It's kind of cool because these bubbles show you how much was sold there, right, Tracy?
Yeah, it's basically volume.
Yeah.
Yeah.
So that's a hard thing to see when you have a level 2, which shows orders that could be filled, and you show a time in sales with like a continuously falling list of prices that were sold. Bookmap actually shows you where things were sold. So yeah, has that additional advantage. It's kind of cool.
Yeah, and I did also notice that Thinkorswim lags. It's probably about a 20th of a second, I guess, but it's enough if you're scalping. It can hurt you. So I actually use DOS to watch the 1 minute candle. And then if I'm trading my live account, I'll use Thinkorswim because there's no commissions.
Yeah.
But yeah, so it's, you know, if you go between the two, you're right. It's nice to have the combination.
Yeah, but I love your acronym here. It's awesome. I think things like this can be very helpful. You know, I have my trade 80 thing, which kind of helps me think through like what's responsible trading look like, and Vault C works for you. And you know, I wouldn't discourage anybody from coming up with their own short little list. It doesn't have to be a cutesy little acronym, but you know, it just you know, what are the half a dozen or less things that you're looking for, you know, so that you make sure you're taking a good trade. It's awesome.
Yeah, mainly for me, it just made me slow down. You know, instead of jumping in a trade, and you know, it made me feel a lot better about a trade when I get into it because I know that at least 3 out of 4 of them have checked the list. So, you know, if it goes bad, it goes bad. But at least I did my due diligence before I got in.
Yeah,
So.
yeah, exactly. That's a good feeling, right? You did your due diligence. You know, you have rules, you obeyed them, and obviously some trades are going to kick you in the teeth, and some are going to work out. And but you don't. The worst feeling is entering a trade that you look back and you're like, I shouldn't have gone in. For me, I usually see that about 1 second after I take the entry, and I'm like, I knew I shouldn't have taken this, and now I'm in it, you know. And I think I got to get myself out of this thing. That's probably one of my my things I need to work on. This is awesome. Thanks, Tracy.
Yep.
We also have some stuff from Amir today. Amir, are you out there?
Hi, yes I am. You hear me?
Yeah, I can hear you. Yeah, we have a few slides here from you. I was wondering if you want to talk through some of your profit taking on some of these trades.
Yeah. So this is a trade of SBSW, and I think it was gapping up at the specific date, and I was looking for it for short. So in 1 minute, I saw that it opened. First candle was high and positive and strong, but then it broke down in 1 minute, broke down the VWAP, and made some consolidation above the 50 moving average and below the VWAP, and then I entered my trade with a stop loss above the VWAP, and that usually I take partials between 10 and 15% each partial along the way. Here I had this 1847 from the daily level, and below that I think it was the pre-market low. It went very well in favor of me, so I kept partialing, and the last piece probably was a little bit shares that probably should be taken out as soon as the 5 minutes candle change the course.
So what percentage partials are these, Amir? Are these 5, 10%?
It's about usually it's about 10%.
10%. Okay. Yeah.
Yeah.
So that's like an Andrew like partialing kind of strategy. You know, you take a little bit off, you know, as you get the move, and kind of, you know, take what you can get kind of thing, and yeah.
And sometimes if the move continues, or if it's only doing a pullback, and I still see it is very weak, I can re-enter and then start all over again.
Mm-hmm. So let's take a look. This is SB. How'd you find SBSW? Is this a recent trade?
Yeah, it was. I think it was from the beginning of March, and it was in play for a few days.
Okay. Yeah. Stock of the day. Let's take a look at. Oops. How about this one? So this is Billy for you, right, Amir?
Yeah. This was also, yeah, it's probably, I'm not sure if it was getting up or down. I don't remember. Anyhow, it gave a really significant move down until 5 minutes before 10, and then with a nice pullback back to the VWAP, and then I saw it did some signs of rejecting the VWAP, and then I entered, and then partials. And most of it, or all of it, was taken out at the level of 24.1, which from the daily level. And then it also gave a pullback back to the VWAP. I re-entered with the stop above the VWAP, and then give another good move with partialing along the way till it broke the low of the day as well.
Nice. Thanks, Amir. I don't think we have Nathan here today. I don't see him in the list of people. He did send in some trade.
I'm here, John.
Oh, you are? Okay. I'm sorry. I'm
Yeah.
reading your name wrong or something. Oh, you're unknown.
No.
Okay. Sorry, brother.
Yeah, I'm not sure how to change the name on
no,
that.
that's all good. That's all good. I got a few slides from you here if you want to talk through a couple. Can we do two, maybe?
Yeah, I was just showing my slides where my entry was after I took my first partial, or the break even was right there. And I took the first partial R2, and I kind of got a little bit scared on it and took another partial, but then it hit R3 and I took that next partial. But then I keep moving my stop up below the 20. And if you can go a couple slides over.
Let's see. This one or more?
Yeah, right there.
Okay.
Like I said, if you saw the one before, I keep moving the stop up between the 20, and then when it come, I saw a level on the let me see, I can't remember what range it was. Can you go to the next slide? One more, I think it was. Or no, I don't guess it shows a level 2. I thought I put the level 2 in there.
You did. I
there.
chopped something. I apologize. I chopped a couple of these down just to make them like readable.
Yeah, I understand. Now I saw that 410 at 225. So instead of keeping it right below the 20, I lowered that stop just a bit to go underneath the that bid at 410. That 410 did at 225.
Yeah, I see it here. Yeah.
And just in case it would keep running on up, which eventually went up a little bit, then come back and stop me back out.
Nice. Yeah, these are some well thought out partials for sure. I'm not familiar. I don't trade too much at R2. Actually, I don't have R2. That's why I don't have R1 and R2 on my my charts. So I'm not used to seeing them. But yeah, notice R2 is right by a dollar level as well, right? So like when you have a combined level of a dollar level and a Camarilla or a daily level, it can often be a strong level to respect. So I like this partial right here, Nathan. I think it's pretty good, even though it popped through. You know that shit happens. You know, but I think this is a smart one for your first one.
Then I believe the fourth partial was pre-market high, if I believe right. If I remember right.
This one here.
Now the fourth partial.
1, 2, 3.
At
around, okay, yeah. Pre-market high is a great place to take a partial as well. I do feel personally that pre-market highs and yesterday's high can be further breakout levels, but believe me, when I am far from when my entry is far from the pre-market high and I get the pre-market high, I take off money there for sure. That's a good target, so that's awesome as well. And this is obviously a very good partial up here. What was this level right here?
There was no level. It just looked like it was starting to exhaust.
Okay, yeah. I see the red dotted line. Is that a level?
That's the
Oh, the high
the
day.
high
Probably.
day.
Okay, yeah. Well, good call. You noticed the exhaustion, yeah, and it certainly did. Yeah, start to sell off there, so that's great as well. So, how would you describe your partialing strategy then, Nathan? So you're looking for a Cambria points factor in pretty heavily.
I just look for the levels. I've got a bad habit of watching the L2, and I partial a little too quickly on a lot of my trades, to where if I let them run a little bit more, I can get a little bit more out of them.
Yeah, I would say what I would have thought around 22. I don't know what the liquidity looked like for Neo at 22, but if it looked pretty big and you caught the liquidity break, I think at a $22 stock, a 10-cent pop over the break is pretty common. So you might think about that as you get the break at 22, to wait for 22.10, which is where you took this partial here. But things, just things to think about. I'm not saying it's right or wrong, but I'm a big fan of letting the liquidity levels break and then see what is beyond that break, and then take a little bit extra off there and take a partial there, or get all out. I mean, I get all out at these days, but like a lot of my targets these days, if I have a strong stock and I have a target that's at $1 level or near one, I'll let it break the $1 level and see if I can get the extra 10 or 20 cents before I get out. But some great partialing here, Nathan, for sure. This looks really good. Thanks for sharing that.
Thank you.
Yeah, brother. Thank you. All right, guys. We are toward the end here. Thank you for everyone for tuning in, and thanks for everyone who participated. Appreciate it very much. And just remember, how to take your money. It will be the hardest thing you'll ever figure out in your day trading. It really will be. I guarantee you, if you stick with this process and you stick with this lifestyle, you're going to figure out your entry and have that pretty clean. You're going to know where you're going to want to get into a trade, but it's going to take you a long time to figure out the optimal way. And I hesitate to use the word optimal because there's no optimal way to take your money, but there's smarter ways than others. And you got to figure out what that is for you. And it takes time. But that being said, there's a couple ways to make more money in trading. Once you become like consistent, as we say, people often want to scale up. Like, oh, I'm making money. It seems like I'm making, on average, I'm making money instead of losing money. So they want to scale up. I used to risk $50 per trade. I'm going to risk 100, and I'll make twice as much. And there's logic in that. Don't get me wrong. I'm not saying that's wrong. It's not. But you also want to do the other thing, which is to get more out of each trade. And I guarantee you, over time, you can get more out of each trade. You really can. You can learn to squeeze more juice out of the orange. There's definitely more money to be gotten. So just think of that. And thanks for everyone for tuning in tonight. Really appreciate it. 2 more days left in the market. It's been an interesting last few days. Obviously, the market is more bullish than bearish at the moment, but we'll let the world tell us what's going to come in the coming days. I mean, we're still in a very uncertain world with oil and geopolitics and stuff like that. So, let things play out and take smart trades. But with that, guys, if no one has anything else, we'll call it good evening.
Thank you, Tom.
Have a good
Thanks, everyone.
All right, guys.
Thank you.
Have a great night.
Thank you, Dima.